Welcome back to Investing with Confidence. As always, I am your host, Joshua David, and we are talking about the do's, the don'ts, how the markets actually work with the financial markets, the stock market. We're going to get into a little bit of options, futures trading, Forex trading, cryptocurrency, whatever that soup du jour of the day is going to be talked about here today on Investing with Confidence, sponsored by Online Trading Academy. If you happen to miss 2 tickets for that investing class right here in Bloomington, they're 2 hours, talk about how the stocks market works, different ways to identify where institutions are buying and selling, but also how to have more consistency in your trading. Just call 952-814-4410 for 2 tickets. When you do that, you're going to receive a financial quick start kit, which includes some free stock picks, or you can just text the word invest to the number 484848. Al, as we continue talking about the stock market, I want to get to the overall market. We talked about Alphabet on the last segment, how it had they're going to be doing a 20-to-1 split. Major earnings on Tuesday evening skyrocketed that price of Alphabet. And then he talked about PayPal, where their earnings drop price, was it $100 or something? It was a significant drop with PayPal overnight on Tuesday, going into Wednesday's open. Now, let's talk about the overall market. The S&P 500 has been rebounding since about the 25th or 24th of January, from that to roughly about a 12% correction in the market. So now prices are roughly, around the 450-ish area, but depends on when you listen to the show here. But let's talk about some supply and demand, and that's how financial markets work. They move from supply zone to demand zone, which is where institutions are moving price, where they're buying and where they're selling. And potentially there might be some selling opportunities here again as price continues to rally with the S&P 500, but it could continue to go up. How do people, and how do you help people make smart investing decisions based on what their goals and objectives are?
Well, and that really is key, is to start out with what your goals are. What do you want your financial life to look like in the future? Because if you can't identify that, there's no way you're going to accurately and efficiently get there. You have to have those goals set. And that's part of putting a plan together, which we help you do. But if your goals are to generate some short-term income, some short-term cash, and that can be anywhere from weekly to monthly. If you're going to need money other than in another 10 or 20 or 30 years, which is what that kind of buy and hold strategy will have you doing, waiting for that time period with your fingers crossed, hoping that there'll be some profit there.
Are you saying that hope is not a strategy?
I'm saying that hope is not a strategy.
Oh,
hoping,
boy.
guessing.
All my buddies and all these people are talking about, I hope stocks go up. That's not a strategy.
No,
I'm glad you mentioned that.
Or they'll say, I hope it doesn't go down any more than it already has. No, hope is not a strategy.
That's why it's so important, like you're saying, to have a plan in your trading and investing before you get into your positions.
Yeah, and here's what the plan should include. In addition to your goals, it should include a way for you to trade like the people that are successful. And who are the people that are successful? That's what we call them, the smart money, the financial elephants. You've got the big companies, Goldman Sachs, JP Morgan, people like Warren Buffett. These are people that are consistently profitable regardless of which direction the market is going. That's the smart money. They actually do all the work. And this is the great thing for us. We want to keep it simple. Let's just piggyback off of the people that are putting millions, if not tens of millions of dollars into research and data every year using sophisticated equipment. They can do that because they have the money to do it. But for us, they're showing us on a price chart what they're doing. So you can either do that. You can either trade with them, identify in a price chart where they're taking their positions, whether they are buying or selling. So you can either trade like them, trade like a pro, or you're going to be trading like an amateur, or maybe trading against them, which over the long run is not going to be a good thing for you to do. In our core strategy, in these classes that Josh is talking about, these free introductory investment classes, we will show you how our core strategy works, how it actually identifies the activity in the future of the smart money. And that's the key, is not only knowing who's moving the market, but when they're going to move it, so you can be a participant with them instead of trying to trade against them.
Yeah, I know in these investing classes that you teach here in Bloomington, you give visuals on how that actually works. And one of the comments I get, I always ask people, what brought you in? How can we help you? What are you looking for in the financial markets? And one of the biggest things I hear, I think of the most often, is I needed and I wanted a physical class to teach me how the market works, how the markets function. I need hands-on learning, and that's us as adults what we really need. I mean, just like anything we do these days, we have to learn it, but you learn it by doing it.
Exactly.
But there's two different ways to do that. You can learn the right way and learn the wrong way, because when you learn the wrong way, that's basically guessing where the information is from, not knowing who the information is from, but also not knowing the right techniques and strategies to use. An online trading academy has proprietary strategies to teach you to make smart investing decisions, whether you have 401k accounts, IRA accounts, maybe just regular retail trading accounts, stocks, options, futures, Forex. And different techniques are different for each person as well.
Right.
As you mentioned, you kicked off this segment. It's important to have a plan. It's important to know what your goal and objective is, and then how do you get there? How do you bridge that gap? So I want to invite people to an investing class that we've been talking about here today on how the markets work, how to have strategies for up markets, how to have strategies for down markets, but also to make smart investing decisions and do that with confidence. You learn that in a physical class right here in Bloomington. Just call 952-814-4410 for 2 tickets. You're going to receive 2 tickets. Also, a financial quick start kit. There's some free stock picks in there that you're going to receive with that. And that really illustrates how supply and demand actually works within the financial markets. So, Al, let's talk a little bit about, we talked about the overall market here recently, and let's talk a little bit about Starbucks. Now, they've been having some rough times, we'll say. They've been increasing prices, and they said, I think I read an article this morning, that they're going to continue to raise prices over the next few months here, over the next year or so. And their stock price has really reflected that, coming off the highs from July of last year, right around $126 per share. Now we're sitting under $100 per share right now. So there's been a significant drop in Starbucks, roughly about 25%. And that goes back to last week's show when we were talking about some of these major stocks down big. And actually, I believe there's the stat out there, don't quote me on this, but it's around half the stocks in the market are actually negative in negative territory. But the stock market continues to rise. So let's talk a little bit about Starbucks. Is this a buying opportunity, or could they continue to potentially still go down?
Well, let me ask you this. You probably drove by 2 or 3 Starbucks on the way in this morning.
I probably did,
And
yes.
every one of you listening, you're probably almost guaranteed you're going to drive by a Starbucks at some point in time during the day. Is it closed? Is it shuttered?
It is not.
No, it is not. So they'll overcome this. They have increased cost, and they have to in order to keep their bottom line where they want it, they have to raise prices. Their cost of coffee goes up. We know that there's a supply chain issue that we're all facing right now. So companies like Starbucks, they're going to go through periods of time like this. But it's look at it from a positive standpoint. It's just providing another opportunity for us. So if you think you missed out on getting in on the Starbucks run over the last few years, maybe this is another opportunity. At some point in time, the price is going to get down to a point where the value of that company is going to be very attractive. The big boys are going to start coming in and buying, and we want to be ready to do the same thing that they're going to do. And they're going to kind of telegraph to us before they do it where they're going to do it from a price standpoint.
You're right. Now, let me ask you this, because we're really talking about opinions in the markets. You feel Starbucks will be around for a long time, which is possible. And I feel, it's been in a downtrend. There might be some more selling opportunities. Well, those are opinions now. Why is it so important to understand price on a price chart, which, supply and demand, to make your financial decisions?
Well, what moves the price of something? If something goes up in price, it only goes up in price because there's a significant amount of buying that causes that to happen. If price goes down, the only way that can happen if there is a significant amount of sell orders that will drive it down. Those are the only 2 things that really impact price. And it drives price from areas of demand where there are buyers to areas of supply where there are sellers. And that difference between the demand and the supply zones or the buy and the sell zones, that's the profit potential that you have. That's a trend. And that's what we want to help you identify. The best possible trade is one where you identify the turning point in price. So you get in at the lowest risk point with the highest profit potential. You want to ride as much of that potential as possible, but also with the highest probability of it working in your favor.
Yeah.
In order to do that, how do you identify those turning points? Well, you identify where, again, the smart money is going to be entering their positions, whether they're buying or selling. And remember, they can almost never get a full position filled or exit a full position at one time because of the large amounts of shares that they have. And that's part of how we benefit from their activities, and that's what we'll show you with our core strategy.
Yeah, you're right.
You also mentioned a while ago the word protection, and that is huge. It's not how much money you make. You can have a trade where you're up 1,000% and still end up losing money. It's not how much you make; it's how much you keep that's important. So the key to being a long-term trader investor, to having longevity in the market, is to protect your assets and never let a large loss impact your portfolio.
Yeah, and I'm glad you brought all that stuff up. I mean, speaking of Starbucks, I mean, I like a nice demand zone right around the $90, right around 90 to 85 or so, a nice area where institutions could potentially be, turning that price, as you were talking about, that turn in price. So that's why you need to understand how to read a price chart, and that's what we teach at Online Trading Academy, how to read price charts and buying at wholesale,
Right.
not at retail. I mean, sometimes you're doing things counterintuitive, something that you're I guess it's not normal to do that in the markets because it doesn't feel right. But think about this. How you buy and sell stocks is exactly how you buy and sell anything in your everyday life. Think about it this way. If you go to the store, are you going to look for the most expensive item, or are you going to look for something on sale? That's the same thing in the financial markets, is looking for something on sale. Starbucks technically is on sale. It's at a 25% discount, especially from July.
Yeah, well, here's something I want to say about that. Yeah, everybody knows you're supposed to buy low and sell high. When things are on sale in a grocery store or clothing store, people love to see a sale, and that's when they start buying.
Yeah.
In the financial markets, it's the opposite.
They panic.
They panic because they think, oh, this is terrible. It's going to continue going down.
But that's what you're conditioned to do.
Right.
You're conditioned by the brokers in Wall Street.
Yeah, not only are you conditioned by them, but you're born with emotions that are going to cause you to do exactly the opposite of what you should do. So part of controlling your emotions is that plan. And that plan should include a step-by-step, rules-based process that you follow, so you take the thinking as much as possible out of it. Your opinions don't matter. What your brain is telling you, or your gut's telling you, is probably going to get you in trouble. So you have to control that, and that's one of the great things about our strategy. It is a rules-based strategy, and you have to follow certain steps. And you do that no matter what you're trading, whether you're trading stock or the futures market or the options market, whether you're a short-term trader, long-term investor. It's those same steps, which, again, keep it simple and just identify what factually is important to identify in any of the financial markets.
Yeah, and if you're listening right now and you need help with a plan, you need help with steps of trading and investing, hands-on in a physical classroom and environment, we actually have classes right here in Bloomington. You actually teach these. I teach these as well, and we talk about how the market works, how to create a financial blueprint or a financial plan based on what your goal and objective is. But first, you have to understand how the markets actually function. It's based off of supply and demand, where institutions are moving price, and how to trade with them, not against them. So if you want to learn more about that, come to one of these investing classes right here in Bloomington. They're only 2 hours. We have these on the weekend. We also have these during the week, even in the evenings. So pretty much anybody that's listening right now has the opportunity to attend. Call 952-814-4410 for 2 tickets, 952-814-4410, or just text the word invest to the number 484848. Now, coming up next, I want to talk about some more stocks and how some of these different earnings reports are affecting them. But also, let's continue talking about this overall market, different opportunities we might see moving forward. This is Josh and Al. We'll be right back.